And uh, one of the most important things which investors want is to know the team behind the startup. And the team, if it is balanced, it has people from all kinds of specialities like finance, like marketing, like product. So a balanced team goes a long way for the investor. Market size opportunity. The larger market size, uh, the more the market size is, the more chances are that the startup will capture some percentage of the market and get a good valuation. So if the market size is small, the targeted market size is small, then of course it doesn't ultimately end of the day there would be a glass ceiling till which the valuations reach. So that is the importance of market size. Then the product is very important. Many times the startup founders, they show the product directly to the investor. So they say that before we tell you the whole business plan, the money making opportunity, we would rather show you the product, and it works wonders. So one of the companies which had approached me, they have created a cross-border transaction enabling platform, a fintech platform, and they were trying to save a lot of fees for these startups, for the consumers who want to make payments cross-border. And so when they approached me, I said, let's have a look at your product. And the entire 1 hour was spent on understanding the product, the look and feel of it, and more than that, what all it enabled. And it was really an amazing discussions, and amazing to know what these guys created. So that is a very important thing to show to the investor. Another thing is business model. You might be having the best idea, you might be chasing the biggest problem, but end of the day it has to earn money. And more than money nowadays, after the WeWork IPO debacle, unit economics has become very important. So the uh, so your business model should be such that you should make money on each unit that you are selling. So that is the importance of business model. Traction is very important. A lot of the companies, they say they are pre-revenue and they are pre-MVP, minimum viable product. And if they are pre-revenue, then the investor tends to be a little circumspect, because having revenue means that your business plan is validated, and it is proven that it can make money. It's always good to have a traction with you, and also show to the investor maybe like a $50,000 kind of revenue or $100,000, but it goes a long way in getting you a good valuation. And also the trust factor. The investor will believe you more if he sees the business performing on the ground. Then competitor analysis. It's very important to know who your competition is, and also tell that to the investor. And if you are telling the name of your competitors, their business model, then you should also tell your competitive advantages over these competitors. And then financial projections. The investor would want to know whether you will reach $1 million revenue mark in the next 5 years or 50 million. So what is that, what are you going to do with this money, and what are you going to achieve in financial numbers? And that is the importance of financial projections. Then the ask. The ask means that how much funds you are expecting from the investor. You can state it in local currency, but do stated in US dollars also. And because, sometimes stating that in local currency is a problem, and, for the investor to understand. And use of funds is very important. The investor wants to know how his money will be utilized. And then, of course, the future roadmap, as in what will you achieve in how many years, on a maybe on the number of customers who are coming in, or the number of hits on the site, or opening of a new office in some separate city, or any such milestones which can form the future roadmap for your business. I've covered almost all the points. I will just, not try to repeat them, but I'll just glance through the slides and see if I have missed something. In the problem statement, there was a question which startup guy asked me. He said, we are into home furnishings. Now, home furnishings don't directly impact any customer's life, because it's a kind of a luxury item, in the sense that people think of it as something which will make their home beautiful. And I'm talking about economies where people's purchasing power is not that much, so it becomes kind of a luxury. So, at the end of the day, what I told the startup was that even fulfilling a fulfilling a home furnishing demand of the customer is also a nice little problem to solve. And with people being very aware nowadays with media and with e-commerce sites, and a lot of options available to all consumers, this any business which meets the need of the consumer in a fundamental way, whether it is high priced luxury or semi luxury or less than that, is a viable product to sell. Then solution, as I said, Uber solved, gave the solution that if people can call for a taxi using their smartphone. So, the solution with a lot of problems, they are being solved through the smartphone, because smartphone is a very sticky product. People use it for 7-8 hours a day on an average, and it brings a lot of power to, in the hands of each consumer. Then the team behind, as I said, very important. Having a balanced team. If you are a non-tech guy, you want to create a tech business, it will be really great to have a tech co-founder. Or you can balance the team by getting people on salaries as well. It doesn't necessarily have to be giving them making them co-founder or giving too much equity. So basically, the management bandwidth is proven by this team factor. Market size, as I told you, there was a company which was creating a localized OOH platform, out of home, digital out of home. And so it is a very practical incident that when we were talking to the investor found out that the total market size for that kind of a product is only $10 million. So I'm sorry. So the deal got stuck on the market size issue. The business model, I would say, is one of the most important. What is your distribution strategy? How are you selling your product? Is it direct to consumer, or it is online? It's more, if it is a SaaS product, is it commission based, yearly commission, monthly commission? So all those things, form a part of the business model. And I would say this is one of the most critical things for an investor, for a startup guy to explain to the investor. Traction, as I said, idea stage and pre-revenue stage companies, they uh, they want to raise funds, but mostly they get small funds. Small, I mean, can be like maybe $40,000 or $30,000. So, excuse me. I mean, actually, it's a little bit late here, so sorry about that. So, uh, traction would also convince uh, the investor that this business and the model has a lot of capacity to scale up, and all this while increasing the revenue, increasing the operating profit, and also making net profit, which will translate to a lot of free cash flows for the company in the next 3 to 5 years. Competitor analysis is very important. So what happens is that there is a research which says that why startups fail, and 54% startups, they actually fail because they created the wrong product. So they didn't create a product which found a market. And when you are keenly aware of who your competitors are, that is the time when you know their business model as well. And since you know their business model also, you are able uh, to analyze and determine the differentiators in your business vis-a-vis the competitors, and that is an information which is very important for the investor. And if you are naming your competitors, it makes a lot of sense to give the competitive advantages your company has, your product has, your brand has over these competitors. And financial projections, some people make it for 5 years, some make it for 3 years. My personal advice to everyone is make it for minimum 5 years, so that we have a very clear picture of till how long investments will happen, when will break even happen, when will operating profit increase, and the ratios will improve. So 5 years is something in the financial projections which you should give. The ask is the amount of fund. It can be, if you are early revenue, it can be in $100,000, $300,000. I've seen a trend recently that uh, in early revenue stage, uh, investors are sometimes giving big money, which means $1 million or more. So this is kind of a trend which I've seen, and those founders who have already done a successful exit and shown to the world that they have it in them, uh, when they get funded in their new venture, it's like there is no bar. So, there is a company here, Cred. The founder got $30 million as seed capital. And there is a founder here, Jitendra Gupta, who was running Jupiter, and he sold Jupiter to PayU. And PayU is owned by Naspers. Naspers sold $25 billion stake in Alibaba, so they are deep pockets. And when Jitendra started his new company, he got $24 million as seed capital. So, but market is willing to bet their money on these founders. But usually, when it comes to seed capital, the amount is not so big. It is generally in a less than half a million kind of range. Use of funds is very important. One investor was telling me on a beer that a lot, some of his startup founders who he funded, they bought fancy cars. So it's a totally different subject, fancy cars and everything. Matter of fact, when it is early stage of funding, then the investor likes to see a cap on the amount of salary which the founders and the team will get from the company. So if it is first stage funding, the cap can be $15,000 per year, or $30,000 per year, and even $50,000 per year. But the investor does like to put some kind of a cap there. Then future roadmap in terms of your customer growth, in terms of geographical market growth, entering new markets, and achieving operating profit, and so on. So this is my presentation. This is a sample roadmap, just to give you an example, and happy to answer your questions, and maybe on venture capital or any such thing. And thank you, Hosni, as well. Thank you. Thank you. Thank you so much. Thank you, Hosni.
Well, thank you so much, Tushar. Thank you. And we already have our next guest, Fabio. But before we get Fabio on stage, I wanted to perhaps get the opportunity to ask you a couple of questions. Is that okay?
Sure. Please feel free. Yeah, sure.
Okay. So yeah, I'm going to activate my camera. Perhaps you can activate your camera as well.
Sure. I'll be doing it just.
Okay, go ahead. I'll let you do that right after you.
Yeah, just a minute. Yes, it is activated now.
Excellent. There we go. Yeah, so I have a couple of questions. And Fabio, just FYI, this is how you activate your camera, so we can see you as well on top of your avatar and your presentation. Fabio is just joining us. So I have a question in regards to basically the environment of the VC, Tushar. In 2019, there was a lot of money invested in venture capital. In 2020, we had the COVID crisis, so a lot of VC firms have simply hold on their future investment and try to focus specifically on what they invested in 2019, try to keep them afloat and try to limit the damage. What do you see coming, or what do you see for 2021, 2022? Do you think we're still going to be a little bit scared of investing on the venture capital, or do you think there will be like an abundance of funds?
So, COVID impacted VC funds in many ways. And you very rightly said that, a lot of the VC funds, they, held back, and they kept cash reserves for their existing investments. Things have happened like people are much more used to striking deals through Zoom and Google Meet, and that has been a very positive adoption of technology. Whether you like it or not, one has to adopt technology. Another factor which happened was that healthcare became an education technology. EdTech and health tech, these two sectors, really came on the forefront. We have governments which are not very rich, and they sometimes in the developing countries spend less on health and education. But matter of fact, COVID forced them to spend more, and this has happened with the Indian government also. So all that money will eventually trickle down to the sector guys as well. And apart from that, fintech has taken off because people want to make transactions more simplified way, and nobody is going to the bank branches, and so that has changed. In India, what happened was that agri-tech became very strong, agriculture technology, because of some laws which were brought out by the government, which freed the market and opened the market. And in 2021 and 22, those countries who have already got the vaccination correct, like US, UK, and Germany, those countries will see a rebound in all kinds of sectors. But you have countries which have big populations, and vaccination is still not going as per schedule. So I think the whole of 2021 will actually go in managing COVID only, and it's only in 2022 that we will see aviation come back, we will see travel and tourism come back, and all those sectors which got left behind bounce back. And a large part of COVID, because people were working from home and sitting at home, stock markets have been on a roll. So there is a divorce between the market reality, the Main Street and the Wall Street. So that kind of opportunity of getting very nice valuations is still, which will continue at least in 2021.
That's very interesting to know. So what's next for you? What's next for you for the rest of 2021 and 2022? And by the way, for whoever is watching us right now, I just want to point you to this specific screen where you can reach out to Tushar, either by email or over LinkedIn is always a good way to do it, or even through the website.
Sure. Thank you so much.
What's next for you? Just the last question for you. What's next for you for 2022?
My next is that I am still helping startups and connecting funds with startups, and also actually, some startups are where I am on the board. So I do a lot of mentoring for them as well. But I won't be very active investor in 2021, and maybe in 2022 we'll look at some exciting companies. But for now, I'm just holding back. Your voice is not coming, Hosni.
So thank you so much for being with us, Tushar. Everyone, please a round of applause for our guest who is in India right now. I'm pretty sure it's quite late for you. So thank you so much for all your great work and grating us with your presence.
Thank you, Hosni. Thank you. I just log off. Thank you, everyone, for coming.
Flavio, you are with us. Where are you, Flavio? Here you are. Come on stage, please. Come with us on stage. Excellent. So guys, we're gonna take a 5 minutes break just to upload Flavio's presentation, and we'll be back in 5 minutes. Josh is here. Josh, if you want to give us, if you want to give everyone a little some guidance around what they can do for 5 minutes, up to you. All right, Flavio, how's it going?
It's going all right.
Excellent, excellent. I know that we're having a little bug with your color, but listen, we always wanted to have extraterrestrial, and believing your pedigree and your experience, you are definitely out of the norm, or out of the ordinary kind of a VC. So I'm really happy that we give you an out of ordinary avatar. But in the meantime, we're gonna try to activate your presentation. So all you can do, it's very simple. Click on the screen behind you. And if you click on the screen behind you, you will be able to upload your document.
Okay. Here. Okay. Looks like.
So here we go. Have you clicked on the screen behind you?
I think so, but I see still consultancy.
No, you're good. You're good. You're just gonna have to upload your PDF.
I don't have a PDF because it's I have I sent my presentation, but in PPT, I will have to.
Let me see what I can do. No, I'm pretty sure I can find
it's okay.
it.
I can save it in PDF, and then
I can do it for you too, but it's your call.
I'm here.
We still have
already,
time.
so. That's okay. I can do it myself. I thought that you would be putting it on screen, so that's why I didn't.
No worries at all. As I said, we have a little bit of time, so that's okay. In the meantime, I'm just gonna get your presentation. Let's see, Sarah should have it. Go.
No, but I've done it. I'm saving it in PDF.
Oh, okay.
So don't worry. I'll
Sounds good.
upload it quite. Hopefully.
Hey, Claudia, how you doing? It's good to see you here.
Should be okay. Okay.
I can see very few too. All right, yeah, the presentation is on screen. Looks fantastic. This is amazing. So listen, when you click on the screen, you will be able to activate your camera as well. Do you want to do that now? Just to see if it works?
Let me see if I can, if it's work. Everything looks a little bit.
Okay, so here's what you're gonna do. Oh, here we go. It works. I think we have a connection issue. We have an internet issue. I can activate mine as well. Here we go. I can see you fine. I can hear you fine. Can you say something? 1, 2, 3. 1, 2, 3.
1, 2, 3. 1, 2, 3.
Yeah, there's a little bit of static sound, maybe due to the headphones. I don't know if you have any other headphones.
I can take them off.
Let's try it out now. It doesn't sound like we can hear you, huh? I don't know if the computer has a microphone integrated in it. If not, it's fine. You know, we can use the headphones.
Can you hear me?
Yes, we can. Can you say 1, 2, 3, 1, 2, 3? Well, I guess he's out.